So my next guest caught my attention. I was reading this about a month or so ago on Nvidia. Essentially says using the whole system, Nvidia market cap would be just a mere $22 trillion. Jensen stood up and said, who is that man, right? And now he's saying that the big picture, from a big picture point of view, the tech sector has never looked better. So I'm going to bring in now John Talbott, sector specialist at UBS HOLT. First of all, the phone had to be ringing off the hook with this one, huh?
Yeah, absolutely. It was definitely a headline to say the least. But I think, Charles, bigger picture, what we're trying to do at HOLT is we're trying to understand the true economic returns of a business. And with Nvidia here, the economic returns in the last few years have just been incredible. So the big question is, can they sustain the levels that they're at right now? That's a big question clients are asking.
So I'm familiar, we're all familiar with return on investment, but this CFROI is relatively new. So explain this, because it's an integral part of your system, right?
Yeah, absolutely. So the CFROI framework has actually been around for many years.
Right.
The way I think of it is, it's a way to compare and contrast all companies around the world on a like-for-like basis. Just give you a very quick example. Think about Taiwan Semi versus Nvidia. One capitalizes R&D and looks at all the gross plant. One does not capitalize the R&D. We put all the metrics in the world on a similar basis, CFROI, and then we value the cash flows of the companies.
So let's look at this here. Then the AI era points to CFROI reaching an all-time high. And so we got the personal computer era, the networking era, the mobile area, the cloud area, and now we have this AI area. This lends credence to the notion that these stocks have more room to the upside.
Yeah, absolutely. So the long arc of time, and I think anybody who's ever bearish on tech has to look at this chart here. Over 50 years of data, we've seen the return on capital rise ever higher for tech. And I think, Charles, to your point now, we're at this AI cycle where returns on capital are around 17%. So the big question is, again, can it be sustained at those levels? And I think as you think about the long arc of history, it's very hard to bet against tech here.
But ironically, people were saying that here, right? Can this last? Will it last? Nah, maybe it won't. Okay, will it last? Nah, we think it's overdone. And it just keeps getting better and better and better. And it's the irony is people are more prone to bet against this long arc of history, to your point, than the momentum we've got. So let's talk about an area where really it's been stuck. The hyperscalers, will they get their money back? A lot of people are concerned there. You wrote specifically about this in a recent report.
Yeah, absolutely. So the big concern is that all this investment, what is the return on capital on this investment? So you are seeing the near-term returns on capital fall. But I think what a lot of investors miss is that while returns on capital are falling, the growth is very high. And you're generating more and more value creation and economic profit there on the right-hand side.
So this is what you're looking at here.
That's right.
This is what investors should be looking at.
That's right. The absolute dollar of economic profit.
And this suggests that these stocks are really undervalued here.
That's right. It suggests that the next few years, the trend remains very positive.
Okay. I want to ask you about on the infrastructure side, which is intriguing because you talk about the earnings surprises. And this, again, goes back 2018, the Amazons, then Google, then Apple. It feels like a new era, right? These are new, fresh names for the most part. Right. But there I read something about the market implied yield. How is that different than the whole system?
Yeah, absolutely. So I think, Charles, yesterday I think you talked about how this time is different.
Right.
And everyone wants to bet against that. What we're suggesting is that the numbers of these companies have been so strong. And even though the fundamentals have been very, very attractive, the market continues to fade those results. And so, ironically, while yes or no, maybe it's different or not, the market already thinks it's not going to be. So to the extent they can stay at these levels, these names are still attractive in our framework.
And software, I've got to ask you about software because you said if software reaccelerates growth and disruption fears abate, focus on stocks with ample upside in the bull scenario. Right. We've already seen a really good bounce. You can argue now, whether it's getting past that so-called dead cat bounce territory or not. But again, your work is suggesting to me, let's just look at this one particular chart here. This line, what is that saying?
Yeah, absolutely. So it's actually saying that even though they've underperformed, they're still roughly fairly valued compared to the overall market. And, Charles, I talked up front about the economic adjustments we're making. We're expensing stock-based comp in our framework. That's an expense that a lot of these companies add back.
You take that into account because that's obviously a big issue. Some say don't worry about it, right. But it's become more prevalent, particularly with the AI, threatening this entire industry.
That's right. And so there's the question of AI, but then the actual fundamentals themselves suggest that the group is around fairly valued right now in our framework.
Okay, and again, we get back to CFROI and 26, 27. This is huge. This is absolutely huge.
Yeah, so this is the big irony and debate is while the fundamentals look very strong, we just don't know what AI is going to do to these companies. So, people are very uncertain right now, so they sell the names.
What about back testing? You've back tested your system?
Yeah, so it screens very well attractively, whether it be our upside metrics or overall framework. But I think bigger picture, investors use HOLT in a lot of different ways. Every investor uses it differently, and there's a lot of ways to use it in your investment process.
And people can go on your site and use it, right? I mean, I went on the site and I saw where you can actually try to apply it yourself.
That's right. So clients of UBS can use our framework. They can go on to UBS Neo, sign up for it, and we have lots of clients around the world.
Great stuff, John. Really great stuff. You know what? I love learning new things. This is phenomenal.
Thank you very much.
Thanks a lot.
Appreciate it.
All right, folks.